Welcome to Knockout Crypto. Thank you for following our channel. I just want to go over some things with you guys real quick before we go into today's video. Got a good video for you guys today about I think Bitcoin will be just fine. Let's look at the cryptocurrency market and see where we're at. Bitcoin right now is at $3,257. XRP 28 cents. Ethereum $85.46. Stellar is at 9 cents. EOS is at 191. Litecoin is at 25.74. Bitcoin Cash at 81.68. Bitcoin SUV 7610, Tron 1 cent. So today's video, we're going to talk about why Bitcoin will be just fine. I know a lot of people are worried right now. We're in a bear market. This year we've had a really tough year, and we're in just a strong bear market for the entire year of 2018. But let me give you some reasons why Bitcoin will be just fine. And found this at bitcoinist.com. Just an opinion, an op-ed piece. Several key events will take place on the digital money market next year that can seriously affect the situation in the crypto and Bitcoin community. In 2018, the prices of cryptocurrencies have been continuously decreasing, and Bitcoin has already fallen in price by 80% from $20,000 to $4,000. The total capitalization of the blockchain industry has decreased by 84%. If in January the market cap was $830 billion, then by the end of November the figure fell to $130 billion. Recently, interest in cryptocurrencies has been growing again, and the market has risen to its values of April this year. Attitude of users toward digital currencies has undergone changes as well. According to Google Trends, most people are now wondering whether the bubble has burst, whether the current situation will lead to the depreciation of digital currencies and the ultimate downfall. Given that the mood on the market is not very positive, Bitcoin has repeatedly dropped in price quite steeply, and if we compare its charts from 2018 with the values of 2014, we can see that the industry is currently in a similar situation that it was in 4 years ago. But this situation applies only to the prices of cryptocurrencies. Much has changed since in terms of market development, as governments have started regulating the digital industry, while some, like Chinese authorities, have banned it altogether. And this chart is very interesting, the chart from 2014 to 2018, and you see there's a lot of similarities there in terms of how the price rose so quickly and then it came down very fast. Large financial institutions are constantly announcing plans regarding the launch of cryptocurrency-related products and integrating blockchain in their current business model. In September, global banking giants UBS Group, AG, Santander, Deutsche Bank, Bank of New York Mellon Corporation, and the British broker ICAP teamed up to issue a new digital currency based on blockchain technology, which is supposed to be used for performing Bitcoin transactions. However, the industry is only at the dawn of its development, so there are many obstacles that are preventing companies from entering the market. On September 20th, the representatives of large Russian banks declared that their readiness to work with cryptocurrencies, but they cannot start rendering such services due to lack of regulation in the country. The bank officials also stated that there is considerable customer interest in digital currencies and announced active testing of blockchain technologies. Many large organizations are preparing to enter the cryptocurrency market in 2019. These events can significantly change the situation in the industry, and the price of Bitcoin will rise once again, as predicted by well-known experts like the head of Fundstrat Tom Lee with his $15,000 mark forecast, chairman of the New York Stock Exchange Jeff Sprider with his Bitcoin and digital assets are here to stay, and billionaire Mike Novogratz. The latter believes the market may see new highs in 2019. I think fundamentally think you're going to see big adoption in 2019, 2020, he said. Lots of the items in the digital world, the e-gaming space, and low-value items, so I think people will be more comfortable participating in blockchain. Back is a platform for institutional investors. The operator of the New York Intercontinental ICE is preparing to launch Back, a platform for institutional investors. Its first product will be Bitcoin futures with physical asset backing. The plan was that the platform would start working on December 12, 2018, but the start had to be postponed to January 24, 2019 due to the large influx of customers. At the end of November, the head of Back, Kelly Loeffler, stated that the current value of Bitcoin is not important for the company. In her opinion, it is now important to compensate for the missing infrastructure elements and unimplemented application scenarios, which would be positively affected by the development of the industry. Asked if price is important, Kelly Loeffler, CEO of Back, said it's immaterial to what the new platform is working on. The price is being expressed, but there's a lot of missing infrastructure and use cases. Fidelity Investments. The Fidelity Investments holding company, which manages assets worth $2.1 trillion, is launching its own cryptocurrency investment platform. The organization will not open an exchange for trading digital currency, as it is preparing to release products for storing large volumes of assets of institutional investors who are already interested in the industry. According to the Fidelity president, Tom Jessup, market analysts, hedge fund managers, and family capital management divisions are actively involved in the development of cryptocurrency-related products and instruments. As such, the experts believe that the situation in the industry can change for the better. Bitcoin ETF and SEC. The United States Securities and Exchange Commission is studying the application to launch a Bitcoin ETF from the SolidX cryptocurrency startup, which filed the application back in March 2016. On June 5th, it was joined by Van Eck. The regulator has not made a decision on the issue, but is expected to release a definite statement by March 2019. According to many experts, this is a very important event for the cryptocurrency market. Investors and financial consultants from Wall Street, Rick Elderman, believes that the market situation will change and it will no longer resemble the Wild West after the approval of the cryptocurrency ETF. He also shares Spector's opinion that Bitcoin is here to stay. According to the head of Van Eck, Gabriel Gorath, a new instrument may be approved in the near future, as the company has never been so close to receiving a positive verdict from the regulator. That is not being denied by the SEC representative Hester Pierce, as she believes that the agency should be more loyal to the Bitcoin ETF, while Security and Exchange Commission Chairman Jay Clayton said that such an outcome is possible only after the problem with market manipulation is resolved. This is key. A lot of people don't realize what he's saying here, but this is used. So there won't be any ETF until the problem with the market manipulation is resolved. A lot of people don't realize this, but a lot of the cryptocurrency markets, Binance, Bitfinex, a lot of Chinese markets are manipulated by the exchanges. They're manipulated by spoofing and price manipulation. We really can't trust the price that we're getting from the exchange. So market manipulation would have to be resolved. And then we have the Bitcoin futures from NASDAQ. On November 26th, Bitcoin has reported that the NASDAQ, one of the largest stock exchanges in the world, is preparing to launch Bitcoin futures for Bitcoin in cooperation with Van Eck. The new product will be launched in the first quarter of 2019, which will be focused on the spot price of Bitcoin from many exchanges, unlike the CME and COBOE, which use information from 4 and 1 platforms respectively. The head of Van Eck, Gabriel Gorbakis, confirmed this information and stressed that if 2018 is considered to be the year of regulation, 2019 will be the year of implementation. He said that the new product will be in the form of a version 2.0 of regulated futures contracts. After the opening of futures on the Chicago Stock Exchange in December 2017, the value of the first cryptocurrency reached a historic high of $20,000, and in January 2018, the capitalization of the industry exceeded $830 billion. Services from large banks. Many large banks such as Goldman Sachs, Morgan Stanley, Citigroup, and others are preparing to launch cryptocurrency futures, derivatives, and are simply providing their customers with access to digital currencies. As reported by Bitcoinist on October 31st, Goldman Sachs has already started attracting customers to launch Bitcoin derivatives, which would be similar to CMBE and CBOE futures, but would not be traded on the exchange. In early November, Morgan Stanley published a report calling Bitcoin a gold mine for institutional investors, where it also draws a parallel between Bitcoin's crash in 2018 and the NASDAQ crash in 2000, and asks whether the bear market is coming to an end in the way that the NASDAQ did. So as you can see, Bitcoin is very similar to the NASDAQ, and then we had a similar rise in the future. In September, Bloomberg cited an anonymous source wrote that Morgan Stanley is preparing to launch swaps for the first cryptocurrency. The company already has the technology to launch the new service and is now studying the level of demand among its large customers. In mid-November, the head of the cryptocurrency division of Susquehanna trading giant Bart Slim said that the launch of products from Fidelity and ICE would help increase the liquidity of Bitcoin and attract significant sums to the market, which will positively affect this development. BitPay's commercial director Sunny Singh shares the opinion, and he is confident that these events will once again raise the price of the asset next year, and during 2019 it will cost between $15,000 and $20,000. Regulation and infrastructure. Experts in the field of finance and managers of large capitals are unanimous in their opinion that cryptocurrencies are in need of serious regulation and require a fundamental infrastructure buildup. If the first factor depends on the regulators, then the latter is up to the blockchain projects. But first things first, in 2017, legislators from different countries studied the issue of cryptocurrency regulation and discussed this issue at the intergovernment level at the G20 summit. After finance ministers took a more positive approach to cryptocurrencies at the 2018 G20 meeting in Argentina, Bitcoin prices topped 9,000. Countries such as Estonia have achieved significant success in solving the issue of cryptocurrency regulation by implementing the concepts of the government, e-government, and residency, as well as the use of blockchain to protect access to citizens' personal data. Malta is in the same league and has secured the status of a crypto island. Joseph Muscat, the Prime Minister of Malta, during a speech at the 73rd session of the UN General Assembly, said, "Blockchain makes cryptocurrencies the inevitable future of money, more transparent since it helps filter good business from bad business, but these distributed ledger technologies can do so much more." Such a state position in relation to cryptocurrencies is suitable for projects that are intent on deploying in large-scale infrastructure. The Photon decentralized crypto bank is developing a solution for conducting multi-currency transactions with a single system of integrated fiat and cryptocurrency exchanges and instant payments for goods and services. In addition to relatively young projects, a number of major exchanges have made their choice in favor of Malta, including Binance, OKX, DB.com, as well as famous blockchain projects such as Tron, Big One, Cubix, BitPay, and others. BitPay has been conducting analysis for many months within the scope of the most friendly jurisdictions for cryptocurrency in the European Union. Productive discussions with the government of the Republic of Malta and the friendly business environment provide BitPay assurance that the choice of Maltese jurisdiction is the best solution. The current market situation that is associated with significant fall in cryptocurrency capitalization will neutralize speculators on projects that have no real value and proven liquidity. In the near future, we will see a recovery of the market and its growth thanks to a more developed infrastructure and civilized regulation. I'm going to read this again. The current market situation that is associated with a significant fall in cryptocurrency capitalization will neutralize speculators and projects that have no real value and proven liquidity. In the near future, we will probably see a recovery of the market and growth thanks to a more developed infrastructure and civilized regulation. So what are you guys' thoughts on this? I mean, you have so much good news coming out in terms of infrastructure and regulation for Bitcoin. I think, we've had this bounce before. Bitcoin will be just fine. I'm looking forward to 2019. If you look, we have back in 2019, Fidelity in 2019, Bitcoin ETF and the SEC in 2019. We have Bitcoin futures from NASDAQ in 2019. We have large banks getting more involved in Bitcoin in 2019. We have regulation and more infrastructure in 2019 coming. We have all of that coming in 2019 to get us ready for the next step for Bitcoin growth. So, I mean, I think we're headed in just a really good direction. I think we just have to be patient, but I think we're headed for a really good direction, and Bitcoin will be just fine. Guys, thank you for following Knockout Crypto. Let me know what you think of the video. Follow us on Instagram, Twitter, YouTube at Knockout Crypto. Thank you for following the channel.